check it out. And now, back to the show. Hey, everybody. Happy Thursday. Welcome to the bloodbath. I'm about to set some trades up for some out-of-the-money puts. The Ivy range has jumped up from around 39 to 63. We're getting a big spike in volatility today. So here is your VIX jumping up into 27.75. It could obviously get worse, but still around this level. And the way that the Ivy rank has jumped up on SPY, this is an instrument that I don't mind owning some shares of. I've got some big enough accounts to stomach it. So I'm going to sell a couple of puts and also do a wider spread. This has about a 97% chance of profit right now. Obviously, if volatility increases, we could see, 460 is quite a bit lower. I don't think this will be out for 88 days. I don't think we're dropping in a straight line on the SPY. So 460 is way down here. This is a 465 5-period moving average on the yearly time frame, and then also we have the previous historic highs at or all-time highs at 480. I don't think the market's going to move in a straight line. Okay, I think if the bulls are lucky, I just got out of a live session this morning. But if the bulls are lucky, there's a little bit of a fight left to at least square this up in some way, shape, or form. So if this is a drop retest of these lows before the market continues lower, or the bulls can fight back and try to fill this gap from that ridiculous tariff announcement yesterday, which didn't really surprise me. I think that if you didn't take Donald Trump seriously with his claims on tariffs and trade wars, now you do. The market clearly didn't price in tariffs. And the market is possibly, because it's forward thinking, going to be pricing in things that are much worse because tariffs will impact the entire global economy. If we are blanketing tariffs for pretty much every country, like there and there and there and there and there, this isn't good. This is so much friction added to the global economy. This will affect earnings, and that is why this next leg lower could be justified. So does that mean that I'm running for the hill? No, I'm just selling premium, taking some nibbles, which is what I did when I wanted to de-risk. This market will likely not move in a straight line. So even another aggressive flush lower will probably be met with some type of short-term rally. Does it come all the way back up here again? Sure, but I am selling levels up here. And I took a couple of synthetic positions, which basically it's easy. I buy a put, and I sell a call at the same level, and I give myself about a $10 to $11 buffer, and anything to the downside is one. It's a -1 delta. So it's the same as shorting the stock without having to take on the margin effects of shorting stock. So you buy a put, you sell a call at the same strike, you collect your credit. I did this on XSP, so it's cash settled, so don't want any assignment risk if price goes higher. And if we go lower, and I was just looking at the average of around 480, and if we have a big swell in applied volatility, I paid $32 for my put. Okay, now I paid $32, but the net trade was $10 credit. So I actually have credit on the trade, but I paid $32 for the debit. If we go from 543 to 480, that is a $63 move. Okay, now that $63 move with implied volatility could also jump up a lot faster if we get there in let's say the next couple of months. So point is, I mean, I have hedges. That's probably the best thing running for me right now. And other than that, it's pretty crappy. So right now, hedges, I'll get these on for the SPY. I've got about $12,000 in hedges right now. And also I'm up on FXY, another couple $1,000. So probably 13K in hedges right now. And then I just took a synthetic position on the SPY, which is up around $5,000. Where those I've got to go in and sort these because I just put them in this morning, but I'm going to put on a couple more trades here. So I'm going out 88 days. Let's go to, let me highlight this so all these accounts can get some love. This will be that account. Let me go. All right, I'm going to go just the put side first. So 460 on a portfolio margin account should be only tying up around $1,100. Perfect. So that trade's going to get a hopefully a 420. Let's go 425 credit. 425 not filling. 424. Bid is 421. All right, 423 just got filled. And this account, okay, I want to take a look at the Dow. Since it is price weighted, not market cap weighted, the Dow is down. I'm looking at the same thing on the Dow. Maybe selling a put on the Dow, depends on the premium, but somewhere in like the 360 zone. Dow out to June, 360. Another one here for 340. Okay, sell some premium there. So let's go 345. $345 got filled. Okay, so let me get those added in. This is SPY, PM accounts, and DIA PM accounts. So that's a 6:30 expiration, 360 sell put for $3.45 to $3.53 credit. And the SPY is a 6:30 expiration, 460 for $4.23. Okay, so I'm going to take these same trades and put on some spreads with my other accounts, and that would be 1, 2, 3, 4, 5, 6. Those accounts right there. Okay, so let's go to June 30th, end of the quarter again. On the SPY, I'm going to start my leg at 460. So I'm selling the 460, and I'm going to buy the 410. So I'm willing to take on that risk. I can go down a little bit lower. Let me see. I guess if I get $2 for the trade, let's get $2. Okay, so 420. See if I get $4 or $2 for this trade. $2 for this trade. There is risk on this. I don't intend to take the assignment. There's still about a 97% chance of profit that with this kind of overshot IV rank that could grow. We could still. If you thought that 2024 is the year that had like the highest VIX on record, I just don't know, right? 2022 was actually pretty contained with the VIX, highs around like 35, but it was a bear market. This was like a one-off event. That was kind of your 2018 Volmageddon we had in 2024. You got to wonder if we come up into the 30s again before it reverts and this market, has some like legs lower. I don't know. I don't think it's going to be a straight run down. I really don't. But I don't think this is a good sign for the bulls at all. So anyway, all right. 460 by 420. Let's see if I get $2 for it. So let me get these accounts there. $1.99. Try to get filled at the mid price. As long as I get $1.95, I'll accept the trade. $1.98 got filled. Okay. 9072. $1.97. Okay. Come on. $1.95, $1.96 got filled. Okay, good. 3.5. Okay, $1.95, $1.96 on those. That would be SPY, IRA accounts, 6/30 expiration. Sell the 460 put, buy the 420 put, $1.95 credit. Let me take the same thing on the Dow. Might be a little bit less premium, but let's have a look. So the previous trade was a 360 sell put. So I'll start there again. 360. So go 20 wide. If I go 30 wide, it's not bad. I go 30 wide, take a little bit less risk in buying power and still make the same premium. It's not bad. Let me go 205 here. So 3, 4. So we get 205. Good. Okay, getting there. Okay, 205 on that one. So that's DIA, 6/30 expiration, sell the 360 put, buy the 320 put. So still going 40 wide, but collecting more premium on the Dow, which is surprising. 205 credit. Okay. So a couple of add-on trades there. And let's check some questions here. Trump tariffs. Good. I mean, if you're trading, I mean, it was a big move in the futures market yesterday. It all happened. I mean, here's my futures feed. Let's go. So this was yesterday. We had that. So it was interesting watching the headlines because the headline said 10% tariffs. And I was like, actually, that's okay because everyone was talking about like 20% across the board, 25% across the board. So the headlines led with a 10%, broad tariff. And then it was boom, just the, reciprocal tariffs, China, 30+%, blah, blah, blah. This is the, American economic expansion, boom, whatever the hell he's calling it. And the market just freaking dumped. I mean, it literally rallied all the yesterday to a point where I was like, okay, we took out these highs. We swept this little pocket. I'm like, we're actually clearing some of these levels. And then just, nope, 15 minutes later, it took back an entire rally for the day. And here we are, no better off. I mean, it's down to the same lows. Now, as I said, I don't think this market goes down in a straight line. Okay. Everyone's freaking panicking right now. But here's my take. Okay. Everyone wondered if the market priced in tariffs, and the answer to that is clearly no. But are they priced in now with a one-off move that's probably a 2+ standard deviation move? Maybe. I mean, I can't tell you the last time that I saw a 4% gap in the market. I mean, I'd be thinking, this gap right here was a gap of around 1.41%. So we had a 3% plus gap on the S&P. We had a 4+% gap in the Nasdaq. Last time I saw that would have been maybe 2022 or probably COVID. So point is, on the technical side, look, I want to have protection. Prices will settle in. The reason I'm showing so much red in my portfolio right now for my P&L on the day is because all of my option prices have been changing. So, I mean, I'm going to comb through my portfolio very, very carefully. And I'm still going to take some bites. I mean, I've got plenty of cash to deploy. I'm gonna wait but I do have some hedges on that I need to pay close attention to. So, futures hedges up around 12 grand. JPY hedges doing well. Let's take a look at gold and silver. I mean, GLD is up $18,000. So let's just go top down. Did you cover? No, it's a sell call there, pimp. So if you do a synthetic short, you buy a put and you sell a call at the same strike. It looks like this. So I bought a put. I was in this morning at a 546 put, so I bought the 546 put on XSP. It was an XSP trade. So I traded an XSP. I've got it right here. So it was a 116 expiration. So we went out to January. I'm not messing around with the timeline. I'm like, if this market's going to dump anywhere in the next, 30, 60, 90, 120 days before we get to the end of the year, let's hopefully take advantage of it. So I bought the 550 call. So 550 call, and then I'm sorry, I bought the 550 put, sold the. There we go. So buy the 550 put, sell the 550 call. Looks like this. There's my short. So I actually collected credit on the trade. So my break even's up here towards like 558, 559. Well, that's what it's showing now. I collected $10 a premium on the trade. So my break even's around 560 before I take in any risk, which is fine. I'm willing to take on like a 1 to 2% drawdown for this trade. But if we continue to flush lower, that's, there's unlimited profit potential here. So realistically, if I turn this into like a $5,000 per account, I mean, I did this on like 13 accounts. So if I've got 5K on all accounts, I mean, I'd say between 50 to 60 grand in this trade. If needed, that's going to help alleviate some of this, right? So trade through it, let the IV, do what it needs to do, settle back in. Some of these trades and expirations, high probability trades, but I can wash away a lot of this pain, which is all kind of looking at it like there's not much I can do. Like it's just when IV goes from, we had a IV rank yesterday around 40, and today it's 60 plus, right? So that swell in volatility, when it expands, that swell in volatility for long options is good if you're in the right direction. If you're long calls, you're getting trashed. If you're long puts in hedges, like my futures trades, I'm up, some decent profit there, but I'm holding them for, the market to go lower. So it's going to be a balancing act. It's not going to be easy. Nothing about this market's going to be simple right now. If we're lucky, I think the bulls can have some fight, and the bulls would just simply, okay, let's say we flush down here. Let's talk technicals. We have a high to low. Okay, the market pulled back to a 38% fib. All right, so I want you to note a couple of levels. These are key levels right here. This previous all-time high, right around 4,800, could be a major level support. Major level support. Okay, 5,000 is also a major level support because it's a round number. This extension around 4,500 could be the destination of this decline. Anytime I've seen, this is FOREX too, but anytime I see fibs that go to 382, it's not stopping at this first 618, it's the 2618, which is all the way down here at 4,500. Right now, I don't know if this is going to be exactly what the market does, but I would imagine that if we have a 382 retracement and this market pushes down to like a 127 area, that we may have a pullback into the same low again before the market gets rejected, or the market, if we're lucky, pulls all the way back into here for some type of flat pattern, and then the bears continue to resume this trend, right? But it is unlikely this drop is going to be a straight line. If it is, obviously that'll be something historic. That's probably never ever happened outside of COVID. But it could be like a nasty 30 to 45 day cycle. If this one just dumps and dumps and dumps and it just feels like the pain won't stop, it's going to get ugly. But what is also creating an inefficient move is likely going to have the reflexivity and elasticity to come back and find some type of balancing before the resumption happens. So like I said, I think if bulls are lucky, the market is going to go down here, fight back a little bit to find these lows or find this gapping area, because this is a massive 3 to 4% gap that I think will be a target at some point. But I just don't think getting bullish right now is the play. Bullish now is not the play. Bullish in the short term. If you're lucky for the market to come back by Friday and try to retest the lows, maybe. But I mean, we are in no man's land, and this is the level I've been talking about for several weeks now. If we break this level, this does not look good. This is probably the most concern that I have for the market structure is that we're breaking below this major support, and there's nothing to stop this thing. August lows, April lows, previous all-time highs. That's it. If you talk about support, I mean, if we're lucky, there's some support in here. If we're lucky, but that's about all I see. So definitely putting the portfolio in defense mode. Getting on additional hedges. I'm running a crash insurance masterclass today at 4 p.m. for this exact reason. I just think that, obviously if you don't insure your portfolio, you're going to be in a bunch of pain if this market continues to drop another 5-10%. And it's usually not the first pullback that hurts. It's the second one, right? It's not this that hurts. It's the flush lower. That's another 10 to 15% lower. It's this swing that most traders get crushed by, because everyone's told buy the dip. So they buy the dip and they don't take any profit here. And then the market flushes them out and then they're freaking out and they're losing everything. So I'm in defense mode, right? So all I'm saying is be defensive, trade smaller. If you got the cash to deploy, I'm selling premium, taking good trades, good stabs to the market. And I'm going to do my best to survive. I mean, regardless, whether I'm red or green, I will show it. I'm trading live through this market. So if that means anything, I mean, I'm in this for real, and I've got clients that I care about and look after, and, we're going to do our best to survive this crap. So if at the end of the day, this market is down, 15 to 25%, and I'm down 0 or 5%, or even somehow clinging to gains for the year, I consider that a pretty big victory, despite basically not getting paid on anything performance-wise. But fighting the market, I mean, that sets me up for a much better road ahead as far as like long-term success. I haven't had to sacrifice any profits since like a Brexit Q4 drawdown in 2016. So it could be a while, but I I did make a claim. I don't know if I'm going to do this, but I was saying like, look, based on this current environment, I don't feel like I should shave until I'm back to all-time highs, but then I'm going to look like Grizzly Adams here probably in the next couple months. So anyway, let's go top down here. While I got you, let me make sure I've got time in the calendar today. We're good. We're good. Yes. Okay. And then I've got the 1 o'clock. Yep. Okay. So S&P heading lower, down 4% from yesterday's close. Nasty. We're down 4.6% on the Nasdaq. Nasty. We're down 3.6% in the Dow. Nasty. Russell down 6%. Yikes. Volatility index up to some fresh highs. We are not back up above the highs we had on the March 13th low. Not yet. I wouldn't be terribly surprised if we do see a VIX spiking up into the 30s. It wouldn't surprise me. And again, like, we never know this, but is this going to be some type of volatility event? Are we going to see some type of flash crash type move? I don't know. That's usually more common in Forex than it is in stocks, but there could be some kind of nasty capitulation. I still think this is a reverting instrument. So I'm picking my battles here. I'm not ready to do it yet. But if we see another big spike down in SVXY, I may end up buying some shares like I did here in August of last year. That Monday open, I bought shares of SVXY, and like 2 weeks later, they're up $10. So, I mean, it's basically, putting in about $4,000, give or take, to make $1,000. It's a pretty good return in a couple of weeks if we have a big reversion on the VIX, but to be determined. I don't know. I've got enough cash to do it. I'm just going to be kind of picky on, I don't want to see some volatility event where this thing, like, if the VIX spikes to, I mean, what crazy is the VIX spiked up to 60 and we're trading at, like, look at this, 42 weight in SVXY, and we're not even close, right? We're not even close to this spike. So I have no idea if this is going to be pushing up into the 30s. When we had a bear market, 2022, it was in the 30s. You go back here during COVID, it was up into the 30s and 40s. So we could still be, buckling up for a lot more volatility ahead. This really did rattle the markets a lot yesterday. Okay. Dollar index, again, gap lower. Euro dollars crushing it to the upside. I didn't even get my fill that I was after. I mean, it looks great. This second trade that I had limit at 106.50 is stupid to take. I'm just going to go ahead and take the profit. I'm only a couple points off. I mean, I had to take profit at 11.70. It's trading at 11.20. I'm just going to go ahead and take the trade off right now for profit and cancel this other trade. That is a winner of like close to 300 pips or so. So currently up right now about 297 pips. I'm just going to take the money and move on. So closing this down for the win. Okay, let me actually, well, there's the trade. Grab a quick shot. This will be my A1 trading highlight since we took that trade together like what, last week? It wasn't even that long ago. So I'm going to take the profit here, closing, and then cancel that buy limit. And now my trade on the euro dollar is done. So, you know, could this be like this giant fundamental shift in everything and the dollar's just going to get absolutely smashed to the downside? Maybe. But based on how this thing fell, I mean, this could all be just a massive correction coming into some key support. Okay, there's inefficiency here and here. So don't be terribly surprised. This is why I said don't call the bottom. You know, everyone's trying to get, it's like I wasn't getting long the dollar. I said I wanted to see this thing fade back into where I wanted to short it and then take it lower. So I nibbled at the euro dollar with a pending, pending buy at a lower price euro dollar, which would be a higher price DXY. The dollar went my way. So everything's fine. But taking profit here as it's approaching this level. And I wouldn't be terribly surprised if the market is going to find some type of bounce here, at least use some support in the near term. But do not catch a falling knife. You know, if we break major structure here, one thing that's also probably a heads up trade to be everyone that's looking to short the dollar yen. Yay, maybe. I still don't trust this yen at all, right? But would anyone be shocked to see this momentum continue and the dollar does not act as a safe haven and this thing keeps sliding lower, coming back to these August 5th lows? I wouldn't be surprised to see that at all. Does that mean I want to jump in and sell dollar yen right now? Of course not. That's a terrible entry at these lows. But if you have a bear flag and a bear flag and a bear flag and we hit these levels, it's an easy sell. Okay, especially across the board. This is probably the yen. You know, I mean, Aussie yen in a different position, right? There's still some room to get back down to the flash crash lows. CAD yen still room to get back down and revisit flash crash lows. Swiss yen, you're getting safe haven versus safe haven, so probably not the best trade there. Euro yen had that big nudge, and it's all noisy. But again, if this one turns further south, we could revisit the flash crash lows. Pound yen, you know, a lot of chop, but still lots of room to get back down to these flash crash lows. New Zealand yen is going to be closer to flash crash lows. But dollar is weak. That's really why this looks like, oh my God. I mean, dollar weak. It's not everything yen. Take a look at your currency strength today. Okay, so Swiss on top, dollar on the. I mean, this is the first time in weeks, maybe months, that we've seen this much volatility. So this is, 4 p.m. afterwards when the tariff announcement was happening. You got the big spikes in volatility. Otherwise, this market was pretty well contained between like a, 60 downside and 70 upside, and then it got way wider going into post 4 p.m. announcement. And then today you're looking at just monster volatility, 140 pips to the upside and 200 pips to the downside. You've got dollar Swiss that has made, is that arguably a 300 pip move? Yep, look at that son of a biscuit. Wow. So I did get filled at 8,600, and I've got another trade down here at the lows around 8,400. Now, what I am loving about this trade, not much, but what I'm liking about it as far as the technical setup is this is a super ridiculous inefficient candle. So whatever happens here, even if this thing slides lower, 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 FOREX is notorious for efficiency. So we're probably coming back into this area in some way, shape, or form on dollar Swiss. But it could be uglier and it could be lower, right? Like we could be going all the way back down here to 83. We could potentially go all the way down to freaking 80. I don't know. Okay, I believe that the Fed watch tool has also called for a additional rate cut. I don't know if it's been priced in at all for May. Let's check the probabilities here. So right now there's still a pause expected, but now we have a June July, September. So it looks like the Fed is being, I mean, again, this is a futures market. So this is just markets pricing in what they think. Pause, and then come May, June, July, or I'm sorry, June, July, September, cut 1, cut 2, and cut 3. And then possibly a fourth cut. Wow. Maybe. This is a little bit slim, but possibly a fourth cut into December. So we'll see. I mean, it doesn't mean the market's going to stop. I mean, I'm still kind of concerned that if the Fed gets really aggressive on rate cuts, that they do so and there's still sticky inflation. I mean, the consumer can probably stop most of the inflation by just hunkering down and stop spending on crap. But we're the U.S. I mean, what did I read yesterday during this Trump tariff announcement? I read that car dealerships were lined up out the door trying to buy freaking cars before the prices went up. It's like, is that what you need right now? Is a brand new car? I mean, 2020 was like buy toilet paper and water, and now it's like I need a new car before the price goes up. Okay, I don't get it. And honestly, if you're going to buy a new car at a 6, 7, 8% interest rate, why? Yeah, I get it. Prices might go a little bit higher, but if your financing costs are down to 3% or 3.5% or 4%, I'd take that car as far as payments go and interest goes. But hey, whatever. Americans be crazy. So anyway, that's where we're at. So a lot of currency movement, a lot of volatility. Let's go gold, oil, silver. So Dow is obviously taking a big drop to the downside. It's doing so inefficiently. So I'm watching that support level at the 101 to 100 handle. If we go to let's go oil for a second. Oil is holy shnikes. What a rejection there on oil. Yikes. And this is why I'm not trading oil. Honestly, this could be the floor that breaks. This is another lever of inflation that if oil breaks this floor, this is probably good for energy prices to go lower, which is better for inflation to come down. Okay. So yeah, I mean, we're smashing right back down to the same floor. Maybe it stops here, but this is why I didn't believe this was going to be the bottom that holds. I don't think there's any such thing as, double, triple, quadruple bottoms. Double, yes. Triple, no. Quadruple, no. So this floor to me is if it breaks, we start sliding into 60, we start sliding to 55. We have a long ways to go to the downside. I mean, what's kind of crazy is let's say that we measure this move. And this is a little off here since we had this first peak around 129, but I'm going to go this move right here to oil. That's a slide, and then put symmetry in here. Okay. Oil symmetry puts us down to about 30. Oh, fudge, man. That would be crazy if we got all the way down to like sub 40 on oil. It'd probably be good for inflation. So if you check your third-party Trueflation, this might be smashed even lower. Nope, it was a 138 yesterday, 139 today. So this is one thing I'm going to keep watching. Like everyone's talking, this tariff stuff is going to be inflationary. It might be inflationary, but it's only inflation for the producers, not the consumers, right? Producers are the ones that have to face the tariffs. It's consumers that are wondering, are we going to have to buy more or buy the tariffed material, right? So I do want to keep an eye on this one because this is a lot more intense than just the CPI, PPI, and PC that we see every month from the government. So if this is, heading lower, it's probably a good sign for inflation to continue to trend lower. But it's also coming with the pain of the stock market dropping to fresh lows. Now the S&P is down over 11%, and probably more to go. So S&P from peak to trough, I think we've crossed into 11+%. We are down 11.7% on the SPX, NDX. I think we're down to 16+% now. We are down 16% on the the Nasdaq. Equal weight. Always curious to everyone's saying like, oh, equal weight's going to be way better. Is it? Is it? Equal weight is down 11%. Not much better. QQQE, equal weighted Nasdaq. Instead of being down 16, 17%, it's down 14%. Yay. Save a couple percent there. Okay, the Dow, peak to trough, not much better. All-time highs, we are around 9.8 to 9.9% off the highs. Russell, bear freaking market, man. I'm glad I got out of those trades in this little retracement. I had some 111s that I closed out for profit. Now I'm just going to start rolling calls down. I still have some shares of the IWM, but this is down over 20%. We're down 22.75%. And also breaching this previous level of resistance. I mean, the Russell doesn't look good at all. At all. So the trades I'm looking at for Russell would be if we come back down to like the 170 handle, then sure, I'll start taking some bites on premium there. That's about it. Okay. Let me check some levels for the day. I saw 5,000 on my gamma levels. I got nothing here, right? I mean, this area could be defended. So I've got gamma levels that we're through. I mean, we breached lower. We could be sliding, all day to like 540, 530. Pain is in, but this is a monster gap that the bulls could fill. It wouldn't necessarily be immediate, but I'll still be watching. And then SPX, see where my big gamma levels are. I saw some scary levels today. 5,400 big level. I mean, short-term defense, sure. Like I said, if the bulls are lucky, market slides into like 5,400, maybe in the near term, the market bounces up. Do we get back to this gap and then fall? Do we actually try to fill this gap in any way, shape, or form? Fill the gap. It's not filled here, but it's at least a fight. It's not filled here, but it's at least a fight. The gap is filled way the hell up here at 5,650. It's a long ways away, everybody. We're like 200 points away from filling the gap. But the bulls, I mean, if this is remember, in futures, this is filled, right? This market drops straight down. This is the futures market, and it's still leaking lower. But I'm just saying, don't be a hero, right? I mean, if we slide to 54 and we bounce up, that's short term. That's market makers doing their thing, defending that level. I could see that. That's fine. From the open or the close yesterday at 56.68, down over 200 points. I mean, honestly, I could probably put in a freaking spread today on SPX. Take small risk because I think it's silly to be calling the bottom today. But I get it. 5,400 could work. So I'm going to look at a butterfly put spread. And right now, I mean, how ugly and how nasty does it get? I mean, if I can go down to like 5,300, we'd have to go from 5,670 to 5,300. We'd have to have a 370 point move today. Maybe. I'll see what the premiums are. Let me find out. So I'll put in a put fly. Move this to 5,300. And okay, so premiums are garbage. Let me see if I can slide this up a little bit. So where is it that I can get about 50 cents for this trade? So 53.40. Am I willing to take on this risk? 53.40 is currently trading around a 10 delta with current prices after the market's already slid X amount. This isn't a bad trade. Now there's a profit trap in here as well. There's still risk on the trade. I get about 30 cents there. I get about 50 to 55. Let me try to get 50. Get 55 cents if I can. Be generous. Spread is pretty wide. Let me see if I get 55 cents. 55 not filling. Son of a biscuit. 50 cents. Come on, be generous. Fill the 50 cents. All right, I'm in. I'm going to throw this in. So this is new trade. April 3rd, expiration. 53.45 put. Sell the 53.40 put. Buy the 53.25 put. Broken wing butterfly. Okay, so I'm throwing that in for 50 cents. There's a profit trap at the end of the day. I'll take this into closing bell. We're still trading with a very low delta, so the probability of profit in this trade is pretty high. But obviously, if it breaks through that 5,400 handle, then I'm going to potentially have some threat, but we have to go another 60 points lower, which again would be pretty ridiculous. So from 56.68 with a close, use a calculator here. 56.68. If I get my position threat at 53.40, that'd be a 328 point sell-off. That is probably a 2 to 2.5 standard deviation move. Crazy. It could happen. Anything can happen. But we'll see if this 5,400 at least offers a pause, maybe a bounce in the near term, or if it's just blood in the freaking streets and I just wasted another 950 bucks. Maybe I did, but we'll find out. So, all right, I'm in. Okay, that's synthetic short. Russell, I'm going to take some bites at Russell. If it come down to like 170, 175, I might actually look at it right now. Premium is super, super high. Let me see if I can get this trade out of the way. Honestly, it's probably a terrible trade because small cap could be just an absolute disaster zone. But based on the expiration, we're at a 68.9 IV rank. That's really high for an index. Maybe the 43-day expiration, if I can get my prices below like the 170 handle. So these lows are on 160. Let me see how creative I can get with this trade. It's so there's a big drop off. I go from like a 110 premium to like an 82-cent premium. Let me see if I can do like a 111. That's kind of garbage. I don't love that trade. I mean, it's a good probability of profit. If I wanted to say, look, I'm willing to own the Russell at 160, I get 50 cents on the trade. That's also not super exciting. That one's a little bit better. I'd own the Russell at 160. This is only a 43-day trade. We got a super high IV. It could get a lot worse. I mean, maybe this is a stupid trade, right? I'd almost be better off just because I don't think the Russell's going to make any money. I mean, either this is going to be like the Bulls have some, last minute fight to try to hold this level. I doubt it. Or we come lower. I'd be better off if I'm not going to take the trade. I'm always thinking if we come down to this level, then I start looking at selling the premium and I just stay way the heck out of the way, and then the market bounces. That to me is a better trade than trying to call the bottom now and just watch this thing. If it bleeds lower, my position is just going to take on heat for weeks. Even though it's only out 40 some days, I think it's a high probability of profit. I mean, I've got about a 96% chance of profit on that trade. So is it an income trade for 43 bucks? Sure. Do I want to take the assignment if I needed to? Yes, maybe. Do I want to? Not really. 165 would be my assignment price. Also, my trap is only $1, so that's even worse. So I'd take $1 off this and then $1.40 off of that. So I'd own shares of the IWM at 162, which realistically would be right at these lows. But I'll just throw this out there. I think there's a decent amount of support, but my biggest concern would be this. We have a high, we have a center low. If this is a double top, this market doesn't stop until probably COVID lows. That's a double top, right? If we break these lows, this market could be going way, way, way lower. So I'm going to say no thanks on the Russell. I'm seeing a lot of chatter on options. Look, I would, a couple things, right? Let me go quick options. Okay, for 27 bucks. If you're interested in learning some options to get you started, this might help. 27 bucks. You want to trade the market bullish? You want to trade the market bearish? You want to trade with defined risk? Easy strategies. I'd be shocked if anybody watched this video series, videos. If you watch this and didn't get a better sense of how to trade some basic options with the ability to trade these markets up and down, okay, and then I have a full course that's up, down, sideways with some of my favorite strategies. But for 27 bucks, it's at least a starting point if interested. Okay, because I think, look, options is how I'm going to stay alive. Options is how this red today is going to also become like this will fade. This drawdown will fade. These are this is a big swell in implied volatility, and this 25K that I'm still hanging on to will grow back into 150 to 200 plus $1,000 probably in the next 3 to 6 months. I'm hedged to the downside. If those hedge profits pay out, I'm going to mitigate some of the pain by anywhere between $30 to $60, which offsets a lot of this trouble. So if it wasn't for options, I wouldn't be the money manager that I am right now. It makes my life manageable. I'm not going to say easy. Like trading is not easy. And anyone that tells you this market's easy, it's because you only traded bull markets. This is what separates real traders from everybody else. This is not going to be fun. This is not going to be easy. Nobody knows what's going to happen. But I think this could help a lot of traders at least get your idea around the basic vocabulary, terminology, the practical application of options, which is if I just look at my chart and I think about this trade in terms of options, defined risk is going to be your best friend. And that way there's no stop loss hunting. There's no shenanigans. There's no liquidity grabs. It's just a defined risk of this line in the sand is whether I either make money or I don't. And I like that trade over the hunts and the fake outs and the spikes and all the crap that the futures market does, all the crap that Forex does. So options are great. And it's not that hard. And also, if you want to reduce a lot of volatility in your portfolio, then you can trade index options. So trade SPX or trade XSP, trade NDX. You trade ETFs as well. But index options are cash settled. You never have to have any assignment risk. So everything is defined risk. So if you're interested, there's the link. It's $27. All right. And like I said, if you like it, I'd like to see some feedback on it. I think that's a great way. Like I basically built a course like that for anybody that knows zero about options. Zero. So I gave that to my nephew that's 17 years old, 19 years old. They understand, some basic trades. Great. Mission accomplished. Now, if they're interested, they can learn more. So there you go. All right. I'll stay out of IWM for right now. I'm just going to go for a couple more minutes here before I wrap up. Keep an eye on the VIX. Dollar index just absolutely getting demolished today. Tons of volatility in Forex. Not a huge surprise. I think the next big leg of the dollar is either a stopping point around this 100 handle. Okay. Or this is the start of this is wave one. All this is a nasty corrective wave 2. And then wave 3 has a push. Well, there's your 618. If we break 100, I mean, I don't know what happens here. Like if the dollar goes to 91, I don't know what that looks like in currency land outside of, well, I guess the dollar is the big landslide move. It's not going to go in a straight line. Nothing ever does. I do see these near-term inefficiencies that we've had. So I could see the dollar pausing, but there's clearly like a fundamental shift going on right now. And this has a lot of like scary potential. Like this to me seems like it is going to be an irrational move that I wouldn't necessarily want to fight. So again, just pick your battles carefully. But if this stalls here and there's a chance to go long, fine. Go long with a very tight stop, and I would have a stop reverse in case this thing's going to smash lower. Like this could be the master plan or the market's plan for the 10-year to go lower, everything to get cheaper with borrowing, inflation to get smashed back down because it's scaring the crap out of every consumer right now that nobody's going to buy anything. So if people just pause for a second and energy prices go down, dollar gets weaker, I mean, like these forces are big enough and fast enough right now that we're starting to see the effects. Like it's not a bad thing to see rates go down, dollar prices go down. But what I don't know is like, is this going to put the U.S. so far behind or in a potential recession that now it's not just some V bottom recovery. Now it's going to take, potentially years to build our way through this. I don't know. And you'd like to think the markets are resilient. You'd like to think we still have some great companies, but this big rotation out of US where we saw, Germany go up and Euro stocks go up and the FTSE go up and China go up. That's one thing I want to look at today. Are those stocks going up? Okay. Is DAX going up? No, it's freaking smashing right to the downside. Is China going up? HSI, any China stock? No, it's falling, right? Alibaba, it's falling. Baidu, it's falling, right? Like this market is going to be weighed by the US. So if the US is falling, it's going to drag everything with it. So this whole drop, if the US is going to prove resilient, it better show some resiliency sooner than later. Because if it doesn't and it gets worse and we see a 15, 20, 25% correction in the US markets, nothing's going to look good. And again, I don't know how this is going to be remembered, but who's going to remember 2025 so far, right? Uncertainty, 10% correction, Trump trade war. I mean, you thought Trump 1.0 was bad. Trump 2.0 is right in your face. Like you didn't take this guy seriously in 2016. Well, now you are, because he is literally doing what he said he was going to do, and it's coming with a lot more pain. You know, he used to brag about the stock market. Now he's not saying shit about the stock market. Big difference. So, I mean, I've been following a lot of smart macro people that are, you know, they don't turn bearish without having lots of data to support it. And the next leg of this trade is if earnings isn't impeccable, this market will be priced lower. Okay. So I'm just trying to give you a heads up, like, don't be a hero. Play defense, take your bites, trade mechanically, follow your rules, probably trade smaller, because if this market opens up with crazy amounts of volatility, nothing is safe, right? Direction, swings, like, I mean, today's a ridiculous move. Look, here's a good example. I took a trade on that little broken wing butterfly that has a 90% chance of profit. I could still lose on that trade today. You know, now if it gets defended, then great. So this trade I won this morning. I've got a 53 40 is going to be my pin price right here. So that's what I'm watching for the end of the day. So I took a nice little win this morning. This is my butterfly at 53.40. That's my pin price. So if we bounce, you know, we have this ridiculous move. We slid lower. We bounce off that 5400 gamma level, maybe. Right. And I think we should. I mean, at least intraday, like this is a monster move. Market makers have been scrambling all morning to kind of get their positions in order. And most likely this is probably how they find it. If they get their positions in order, it means they open up here. They buy a ton of puts to offset their sell put levels to defend their market maker levels. And we'll probably sit here with this monster gap. The blood is already running all over the markets. And you know, we look at today's price action, maybe a little bit lower, maybe a little bit here, and then that's the day. The day itself doesn't really do much at all, but it's the damage that's done from overnight. You know, and then tomorrow's a new day. So that's kind of the beautiful thing about zero DTE is there's still big pockets that are defending these levels, and they're pretty straightforward trading. Okay, all right, a couple more before I go. Like I said, if US is down, everything's down for the most part. You can look at the heat map and see that. The 10-year yield, though, dropping to fresh lows is encouraging. Okay, I was just talking to a mortgage banker around here at a 6.5% interest rate, and now we are down. I mean, I'm within about 60 days of closing on a house here, and the market has dropped around 37 basis points. I would hope that's reflected in this interest rate. I'd like to be able to close on a house in the low sixes if possible. You know, I still want to refi, but that refi probably doesn't come until, you know, I'm like probably 1% lower. So, I mean, I'm hopeful. You know, things obviously get worse, then this 10-year continues to drop. And if you've been following these streams at all for 2025, this is exactly what I said. If we're going to see downward push on the US 10-year, it's probably going to come at the pain of the market. Not because of the Fed cutting rates, because that was the exact opposite reaction here. It's pain in the market. Well, we have it. So how much more pain do we have ahead? Well, if we have more pain in the market, you can, I guess, be happy that buying a car or buying a house would get a little bit cheaper as far as interest rates. But to what degree? Possibly an earnings revision that's going to push the market lower, possibly job cuts, possibly a recession. Like, we're so close to that brink. That's the scary part. Now, having said that, at the end of the day, if you're long term, this market's going to be fine. And when I say long term, I'm like, give yourself 3 years, give yourself 5 years, give yourself 10 years. Market's going to be fine. I will say that if we have opportunities that are like, you know, 5-year, 10-year discounts, I'm happy to back up the truck. I'm happy to deploy as much capital as I can and look at the ability to turn, you know, a $3 million portfolio into $5-6 million. It's going to take time and patience and a lot of little bites. But if we have opportunities like we did during COVID, when it's like, look, everything's on sale, I'm just going to deploy some capital, trade, you know, sell some premium. Those are easy profits, but we're not there yet. You know, I wouldn't get really excited about deploying a lot of cash until we're probably down 25 to 30%. That's when I'm more interested in, like, okay, longer term, I think I'm going to be pretty aggressive here. And I still think we could go 50%. If the market's going to get really crappy, we can go 50%. And that'll be, you know, you're talking as bad as a great financial crisis. Awesome. You know, but again, the market's not going to move in a straight line. All I can say is trade good risk. Don't do anything stupid. Don't be a hero. Call on tops and bottoms. Be careful. I'm still going to day trade. I'm still going to swing trade. I'm still going to take my bites when I think it's appropriate. I'm going to trade. And so when the dust settles, I'll figure it out. I'll navigate this crap and I'll be profitable. I'm not worried about that. But it's not going to be easy. Gold. Okay. Gold, pretty volatile on the day. 3166. We're not that far away from 3200. I keep saying this. I put in that 20% extended level over the 200 moving average. One interesting spot to watch for with the dollar index, if you watch DXY in gold, is if we have that giant flush on the dollar and it hits 101 or 100 and the dollar pivots hard to come back and find that pocket. That could be a top in gold. Could be. I don't know if it will be, but it could be. Right? So I'm still not buying gold, although I'm not upset about the profits that I have. I could still run and still run hot, but a pullback is still what I'm looking for and waiting for. Silver, yikes. Not a good look for silver. But I still think silver is incredibly well supported. If I'm going to do more trading on silver, I want to see maybe something in the futures market where if we come back down to a support level or a support level, maybe going out of the way for a 1-1-1 trade that I've done before. So I did that, off of these lows. I did it off of these lows. I did it off of these lows. Like those have been good income trades. Okay. But gold, I think a pullback is needed. I think a pullback is closer lined up now with that dollar index looking as nasty as it is and inefficient, that a pivot on the dollar could also be a pivot in gold, at least to find this, working back to the 200 moving average. Bitcoin, up to 88, down to 81. Not huge destruction on Bitcoin for right now. More volatile MicroStrategy, but also like Bitcoin's hanging in there pretty resiliently. Coinbase, I still got a 155 and watch this one. This is out to April. Let me check this before I go. Coin 155 out to April. This is only out 14 days. Not profit yet because of the swell and volatility, but this is another one that's it's $1,000 a profit as long as we stay above 155. I mean, it may not happen. In 14 days, this might get worse. I might take on some shares. I might have to repair it like I'm doing on Tesla. Speaking of Tesla, for all of its great and glory, I'm still holding up above the 247.50, which is get called away. I did the math on this yesterday. It is a roll from 247.50 to next Friday. If it stays above there, great. There's some income. But I'm not flirting with Tesla too much longer. Hopefully it will stay above that 247.50 level, get it called away for some bucks next week. Should be like $7,000, maybe more now because I did a roll. So, all right. Anyway, that's it. I'll let you go for today. And see you later. All right. Thanks. See you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely and we'll see you tomorrow.